Ladies and gentlemen, it's taken 3 weeks, but Ethereum is back above 3,000. It's it took a little while. It felt like 3 months, only 3 weeks, of course. We talk about the beginning of the month, March 1st. There was still a lot of fear related to the war, which is, of course, still going on. But now uh, people have sort of accepted that it could go on for a while. And uh, at its peak, uh, the fear was pretty prominent, but now it's sort of subdued, along with the inflation, of course, after last week's FOMC decision to hike up interest rates by a quarter of a percentage point. This was expected, of course, and with that dust settled, it appears that crypto markets, at least for now, are pumping. It could be a false pump, sort of like the one that we had back at the turn of the month, but for now, things are looking bright, and we're going to try to figure out exactly how bright by looking at divergences, compare the metrics that we're currently seeing on the on-chain and social side to what we've seen historically, and seeing what price performances have happened at that time in the past to what will happen now. So beginning here, we're taking a look at circulation. This is, of course, just unique uh, tokens moving on the network on a day-by-day basis. Each one of these pink spikes is 1 day. We're looking at the last 1 year of data. And this red line here is the 30-day smooth moving average trend line, showing that after mid to late May, when things really peaked, it kind of slid down. And yes, we had our big rally where it had an all-time high in October and then eventually November. Almost made it back on December, right at the turn of the month between late November, early December, before fading down. But it's not looking great considering the fact that circulation has been falling. As of late, we're looking at about 758K per Ethereum moving per day, whereas back at its peak of this past year, we were seeing around 1.85 million, more than twice the amount of circulation. So from a circulation standpoint, looking semi-bearish to bearish right now. Not a huge drop off by any means, but you can see the slide that's just gradually been moving down, even though we're starting to see, another emergence here. So stay uh, in close proximity to this metric to see if you can catch when things start to turn around a little more like daily active addresses here. And here on the daily active address side, we've seen a number of very large spikes. This one back on March 9th, 632,000 daily active addresses on the network. Here on the 15th, 625,000. And then the largest of 2022 so far occurred just a couple days ago on March 18th, where we saw 650.9 thousand. Obviously, the high, at least, yeah, going back since May, um, is on December 5th, where we got to 770,000. But really, this tells the story. The smooth moving average here starting to climb up. It's certainly not back to where we were when we were just a week or two past the all-time high. This would indicate that there's a ton of utility, and it's controlled by not just whales, but many retail traders out there who are shifting their Ethereum from one address to some other address, buying, selling, whatnot. The whole point in looking at circulation and daily active addresses is to simply see how much utility is going on. And when there's a lot of unique addresses and unique tokens being moved, that's a very good sign of things to come. We saw it here, right before we hit our all-time high, before dropping off as we were hitting the all-time high. That's kind of what we look for. We look for a bit of a 1 to 2 week delay, just like this, where things were pumping with the daily active addresses. It peaked here on May 8th, and then that local top happened a few days later as it was already starting to decline. So this is a great foreshadow metric along with circulation. Speaking of circulation, we also have this NVT analysis model. It'll show us on a simple 5-color scale, very intuitive: green, yellow, orange, and red, going from bullish to bearish. Ethereum has not been seeing good circulation for a while, which of course matches what we looked at here, where it's just a mild decline ever since May. Um, We went through a long stretch of orange, beginning just a month after the then all-time high that occurred in May. Big drop here. And yes, we had this big rebound, but arguably this happened more so due to Bitcoin having its time of glory, hitting its, of course, own all-time high on November 9th or 10th or so. Um, and it pushed up the markets with it. So even though circulation has been down, it made that new all-time high. Ethereum did made that new all-time high in November before plummeting quite quickly. And yes, here in March, we're seeing a bearish divergence indicating that the amount of unique tokens moving is not keeping up with where the market cap level currently is here at $3,000. So that's something to keep in mind as well. But that's enough on the two utility metrics. Let's go back to a few others that we value pretty highly. This is our MVRV metric. Generally here, we look for, let me move this down to -15. We look for anything below -15% as a historically good time to buy. It generally is an indication of a bottom being very close. And you can see here in late January, there was a perfect signal indicating we fell below that line, and then boom, huge bounce until we started hitting this positive range. It's not, let me move this down. I don't know how it got so high. It's not quite above 15% now. And it just tipped it back here when prices corrected. This was about 2 weeks before the war news broke, but there was a lot of inflation fears going on at this time. You see the big retrace. MVRV starts to go negative here. And when it's negative, it didn't go all the way below this line, but it did go negative and then bounced the price up quite nicely. So now we're in positive territory. We're not quite in this huge danger zone here, but all things considered, this is a riskier time than usual to be in Ethereum. So keep that in mind based on the 30-day MVRV. As far as funding rates go, so I highlighted DYDX and FTX here because they give us the best granular look at an hour-by-hour perspective of funding rates, whether people are longing at a high rate or shorting at a high rate or anything in between. I'll remove these because I made a simple average metric here by combining the two, dividing by 2. And we can see, if I go to filled area where the positive and negative is, I'll just zoom into the last week just for a sec here. And we can see that it's mostly been positive. So again, this is a bit of a concern. Generally speaking, prices do well when you're seeing a lot of shorts happening like they were happening here in mid-March. I shouldn't say mid-March. This was only just 6 days ago, of course, when things started to bounce. And once they did, we started getting a lot of top signals here because lots of longs were happening. Even back here, it was starting to flatten out. Finally went negative here, and that's when you saw the big surge. And then it's sort of topped out with a lot of people trying to long this, only to get burned. And then finally, we see a lot of volatility and indecisiveness, and boom. Now this, of course, it's a crypto-wide pump right now. So you can't just attribute Ethereum's pump, this big jump of about 6% in the most recent 8 hours or so, all due to funding rate. But it is a good sign and an indication that the funding rate had calmed down, not just for Ethereum, but a lot of projects, and that allowed prices to kind of do their own thing without greed or fear factoring in. Supply and exchanges, let me go back to 6 months here. We've seen some interesting signs with supply and exchanges. We actually saw 2 consistent move ups over the past 6 months. The first being from early December right up until a few days after Christmas. Then we saw it resume going down. Ethereum's supply and exchange has been going down for quite a while, but then it climbed up again from mid-February all the way until late February before finally starting to tick back down a bit again. If we start seeing it down here at around below 13%, that will be a very good sign that Ethereum hodlers are again becoming confident and content with keeping their bags in cold wallets. Now, as for whale transactions, this one's interesting. I highlighted a few things here. For one, whale transaction count of $100,000 or more. So this is just any transaction on the Ethereum network that is valued at 100,000 USD or more. Mostly it's been ticking down right now. You can see that the yellow bars here, ever since late January, when you clearly saw that whales were buying the bottom, things were starting to move down. I can also kind of smooth it out a little bit because we're looking at 4 hours. If I change that to a week, you can see, if I highlight there, it's been kind of a decline pretty much since the end of 2021, early December to be exact. Outside of this anomaly here, the whale transaction count has been slowly declining and hitting the lowest amount that it's seen since mid-September, about 6 months ago. So keep that in mind. A little bit semi-bearish there because we'd prefer to start seeing whales jumping in and moving their Ethereum. It would be a sign of dormancy and stagnancy coming to an end. So now I'll take this off. I'll show you guys what I did here. I highlighted the 3 largest tiers of Ethereum, those holding 100K to a million to 10 million, and 10 million to infinite amounts of Ethereum. Something interesting happened about almost 2 weeks ago. There was an ETH 2.0 contract that actually went over 10 million, and when it did, it graduated basically from the 1 to 10 million line to the 10 million plus line. And that's why you see this big bounce. I first saw it and talked to the staff about it, freaking out and going, something huge is happening. Turns out it was just one contract that finally went over the 10 million Ethereum mark, and that's what caused this huge line. But if I take these off and focus on kind of the largest retail trader line, which is the 100K to 1 million line, you can see that it's mostly been just a roller coaster up and down, and it's actually been going down more as of late. If I zoom out here, let's go to like the last 2 years. You can see that it's actually been declining for quite a while. Going back to late March of 2020, we're looking at this category of hodlers at around 32% of the total supply. They've dropped almost 10% of that supply. So yes, some of that has been actually going to the tier above it, which is good. But overall, I find this a bit concerning. Ethereum tends to be one of the trickier ones to read as far as whale activity go, though, which is why I included the whale transaction count, which is also on a mild decline right now. So a bit of a concern there. As far as exchange flow balance, not much to say. Kind of just, let me zoom into just the last 3 months. It's been kind of a zigzag, a little more outflow than inflow, which matches the supply on exchanges chart we looked at. But at the very least, like, we aren't seeing these huge weeks of, or I should say days of inflows coming in that were super high. You can see how prices were moving down when those inflows were coming in until they stopped. And now it's kind of a neutral thing, if not just a little bit on the outflow edge as of late. So this contributed to the rise, undoubtedly. And right now, this is looking like a pretty good chart here because I'm not seeing any serious inflows that have come in. Network realized profit loss, not much to say there. I'll skip that. Development activity, let's go to the last 2 years again, just to look at a little perspective for Ethereum. And yeah, we're definitely seeing, like, on the 2-year trend, you know, we're seeing a modest uptick, indicating that the amount of notable GitHub activity is favoring an increase on a month-to-month basis. Yes, there's plenty of volatility. There's drop-offs in October and at the end of the year. Keep in mind holidays matter. So like Christmas time here, those make sense. But if you take those out, we definitely have a decent increase here. So I like to see, you know, whether it's Ethereum or a much smaller, lesser known coin that doesn't have billions and billions of market cap, I like to see that a project looks something like this and is over time increasing its amount of activity on GitHub and not decreasing or having Very little movement whatsoever. Now onto the social side. Social volume, definitely seeing an increase over the last 2 years. Social dominance, though, not so much. It's interesting. Let me go to the last 6 months. Get rid of social volume. So dominance peaked out around February 20th. This was just a couple days before Putin announced war on Ukraine. Uh, Likely unrelated, but it does appear that more discussion tends to come when there are big drops in Ethereum's price. And when that happens, it actually can be a bit of a bottom indicator. I'll zoom out to 7 days as it's lately been a better foreshadower, in my opinion, in looking in some of these projects. And yeah, it does appear that like over the last 6 months, the high levels of discussion related to Ethereum versus other top 100 market cap assets is mostly happening right before bottoms occur. Right now, not a lot of discussion. Um, this isn't necessarily a bad thing. Uh, it's kind of like when an altcoin, a smaller altcoin, uh, hits a huge price surge and then suddenly gets a ton of discussion related to that particular asset. That's generally a top indicator. But the opposite tends to come true too. If you see a big slide like this and then suddenly social dominance is really surging, it's likely because people are panicking and there's a lot of FUD in the air when it comes to the asset. And I think that's what's been occurring with Ethereum. Right now, it's pretty much neutral though, and close to 6-month lows in terms of discussion rates. Now, weighted sentiment is definitely interesting. Let me switch to 7 days here. Ethereum has been less uh, less positive than the average historical amount of positivity that it sees for the last 1, 2, 3, 4 weeks now. It's starting to neutralize, but I do think this is a very solid bottom indicator when you're seeing a lot of negativity, even here, right? Like back in early January, little bounce there until people got a bit euphoric, and then the plummet. Uh, People got a little fearful here, rose again, got positive, plummet. And then same kind of thing here. We started to get very negative in late February, just a couple days after war. So this was, of course, related to real-time activities. Price rises. And yes, it's been volatile ever since, but the overall trend has been up over these past 4 weeks. And the amount of FUD and negativity has a lot to do with it. And there's a reason why you're not seeing a ton of euphoric rocket ships all over the place with Ethereum being back over 3,000, because our data is showing that people have kind of forgotten about it, or at least aren't paying too close attention because eyes have been on Bitcoin or some of the more surging altcoins out there as of late. So that's interesting on the social side. I've got a few more bonus metrics to show. We talked about MVRV earlier. This is the average MVRV line that combines 1, 7, 30, 90, 180, and 365-day average trading returns, blends them all together, and shows from multiple time frames when we're getting really toppy or really bottomy. Let's pretend that's a word. And it's been mostly negative throughout 2022, barely crept above the neutral line a few times, almost got neutral here, and was negative at the time that it had this little pump here. So that it's still looking like there could be a little meat on the bone for Ethereum from this perspective. It looks a lot better than just the 30-day MVRV by itself. And more or less, we can call this neutral. But because so many of those long-term traders, like the 3 and 6 month ones, who've been really hammered by this, price drop that happened in mid-November, that's why the average MVRV still looks negative right now, which is a good thing because that's when bottoms typically occur, especially if we start getting down to these levels or definitely this level. And then I also have this red line here. This is kind of like a shorter term versus longer term MVRV and compares them to each other to show when the longer term traders are catching up to the shorter term traders. And typically, just like regular MVRV, the lower you are, the more likely there is going to be a bottom. clearly showed perfectly here in July and showed perfectly right at the turn between January and February. We're still in negative territory, so that's another nice bonus. I like to reference this when making some insights and social posts for sentiment, and I think it's pretty valuable. So if you guys are interested, I will leave the links to this one in the description. Active addresses versus price. We looked at circulation and active addresses at the beginning of the call. Active addresses was looking a bit better than circulation. In fact, we were seeing the biggest spikes when comparing active addresses to where the suppressed prices were. These were the highest spikes we've seen going all the way back to July, and that's pretty shocking. And yes, it's starting to come down as prices moving up, but those spikes were definitely showing that there was some relation to the price falling so hard and showing a bit of a bullish divergence, in my opinion, because we're talking about what's that about a 10-month high in terms of the divergence between utility and the where the price is right now. So I think this is pretty good. And typically when you see these spikes, that's when the bottoms occur. Big spikes, bottoms occur. Even here, these spikes here, huge surge until it went low, and that's when the corrections happen. So I really like to look at that one from time to time. Positive divided by negative sentiment. This one's an interesting one. It does tend to go up over time just because there are more and more people on Twitter. But if I zoom out a little and look at like the long-term trend, here's the last 2 years. This kind of proves my point. Like it's kind of related to what's relative, and like we saw the biggest spikes of positive versus negative sentiment about a month ago, and it's fallen off a little bit, even though relatively speaking, it's so much higher than it was in 2020. Um, I find this more interesting than useful, but if you guys think this is cool, I'll definitely try to do some more analysis on it. And then we already touched on average funding rate. Yeah, let's wrap it up here for now. So obviously, Ethereum is, you know, continuing to be stuck between not quite being defined as an altcoin, but also not being Bitcoin. And unless it's pumping, I've noticed that there is not quite as much discussion related to it as there is when, you know, the meme coins or Luna or many of the other assets out there just go on this huge pump. And then, you know, when things go down, all eyes go to Bitcoin. But keep in mind that Ethereum has a few things working in its favor. I know whales weren't looking too good. Funding rate was looking kind of neutral. MVRV isn't 30-day MVRV wasn't looking so good. But if you combine everything, there's some intrigue here, and I think it could be a little sneaky right now. Overall, I think we should be a little careful until Bitcoin's metrics look a little better. I'll try to cover those soon. We do it every Friday on This Week in Crypto, but if Bitcoin starts to look bullish, Ethereum could very well take the lead on, not take the lead on overall market cap, but on a percentage gain basis, could be a better play. So once things turn for Bitcoin and really start to show a bullish divergence, we'll revisit Ethereum, see how it looks. In the meantime, feel free to drop a like and subscribe to this channel if you haven't yet. Share these kinds of metrics with your friend. Open up a free trial if you'd like and explore everything we have for a week free. And if you like it, go to our pricing page, grab a Sandbase Pro membership, and it's only $44 a month. Really good value. And we're here to help any way we can, guys. Really hope you enjoy these kinds of insights, and I hope we can see you on Discord as well. I'll talk to y'all very soon, and stay safe.